Okay, good evening, everyone. Good evening. Let's do some sound checks. Let's do some sound checks, guys. Am I coming across? All right. Okay. So today's session, okay, we called in today to discuss about order flow based trading. And order flow, as you know, is live demand and supply and live streaming real time demand and supply of the market. And that in itself has got a huge edge in the way, okay, we understand the net demand and supply of the market. And in today's session, we're going to be going over a few key concepts of what the order flow is, and I'll try to unravel a few things about what the order flow is, and also have an open session to answer your questions. I know I've been an order flow newbie myself, and I know that the entire thing looks a little bit daunting. It's a looks a lot more challenging when you first approach this kind of chart, and those numbers really come at you when you are looking at an order flow chart, and things become a little bit too much to digest in the very first glance at an order flow chart. But if you're patient with me, if you listen to us out, and if you give order flow a bit of time, it's one of the finest instruments you'll ever find to trade markets, because principally what is the market? The market is just about demand and supply, buyers and sellers. And if you break the entire market down, those are just the two words which should matter to you. It's not indicators, it's not your averages, it's not any kind of magic instrument or any kind of magic formula to describe the market. The market is essentially demand and supply. And when demand goes higher, price has to rise. When supply goes higher, price has to fall. There is nothing else to the market. So if you can understand this, that the market is demand and supply, and you can understand who is moving the demand and who is moving the supply, the order flow chart becomes clear to you. Right now, for those of you who are seeing an order flow chart for the very first time, you'll see a bunch of numbers on your screen, and those numbers are essentially the numbers which are created by buyers and sellers today. And if in the instrument we're looking at is the chart on screen is the Nifty futures, and you'll see a series of green fonts, and you'll see some white colored numbers, and you'll see some red colored numbers. The red is sellers, the green is buyers, and the white is the general volume of the market. We tend to ignore the white. We focus on the green, that is the role of buyers, and we focus on the red, which is the role of sellers in the market. And in a sense, this is what an order flow chart looks like. You bring everything together, you put all the numbers next to the candle, next to the bar you're looking at, and you look within that candle, you will see the net demand and supply which is coming in the bar. Right now, before I go on, I want to open the floor and keep the floor open for any kind of questions you may be having. And we'll start with some questions, and then we'll go further into what the order flow is all about. So if you have any questions to ask me about the essence of order flow, or what you understand is order flow, I'm here to answer your questions. We'll keep the floor open, and we'll try to answer these questions for you. So please feel free to shoot. I'm looking at your questions also as they come in, and if you have anything specific to ask about the order flow, please feel free. But from me, the definition of order flow is very simple: demand and supply. And all you have to see is this particular bar, and there are series of candles out over here, like this particular one over here. The ones on the right, which have the color green or the lettering green, is the demand of the market, and the ones on the left, which have got the font which is pink, is the supply of the market. And at every single point, you will find a buyer and a seller in the market, and where this demand goes higher, price is supposed to rise, and when this supply goes higher, prices got to sell, prices got to fall, and the sellers have got to ask. All right, so there is a question which is coming in: difference between COT and delta. It's an aggressive kind of question, okay, to begin the day with. But the thing is, at VTrender, the charts, okay, which we have in order flow, we do not use that delta at all. In fact, okay, you will not find the mention of delta on any of our charts, right? We do not use delta, neither okay we use the derivative of delta, which is called cumulative delta, and that okay you will not find in any of our charts itself. Delta by definition is the aggressive demand and the aggressive sellers of the market, and by definition, okay, that is the market linked orders, right? But what had happened is, if you google if you go back and google, and you go back, okay, to a date in September 2021, that's September of 2021, the NSE, the SEBI, and in fact, okay, came with a circular, and they banned market orders in options. Okay, so in essentially, okay, that distributed, or that took the delta equation out of charts, right? So which is why, okay, we do not focus on delta at all. Okay, we focus on something, okay, which is COT, which is proprietary to the work, okay, which we do at VTrender, but it sums up, okay, the net of demand and supply in a bar. Okay, and COT is not to be seen, okay, for one bar. COT is a sum total of a number of bars, which when viewed as a collective tells you what can happen next in the bar. Right now, I know a lot of you have got different questions, okay, to ask about order flow. But if you bear with me, okay, order flow is not just one thing called delta, or for that matter, okay, called COT, or even, okay, imbalances, etc. Delta is a set of five things. Sorry, order flow. Order flow is a set of five things. So if you go, okay, to the user manual, you can go, okay, through the menu option, you go to the user manual, and if you click on this third one, order flow intro videos, okay, we talk to you about what we mean by order flow. So there are about 6 videos over here, and the chart on your screen, okay, will tell you, okay, what we mean and what we intend, okay, when we say order flow. So there is an introduction, which is the video one. Then order flow is something called market liquidity, which we sum up, okay, as seeing zeros in a bar, and the kind of, okay, volume, okay, which is flowing in the market. That's one. The second aspect of order flow is COT, the commitment of trade, the open interest in the bar. The third aspect of order flow is RB, IB, RS, and IS, which is responsive buyers, initiative buyers, responsive sellers, and initiative sellers. The fourth aspect of order flow is volume clusters. And the fifth aspect of order flow is understanding imbalances, or stacked imbalances, it's what we call. So all of these five things, when put together, you get this term called order flow. So order flow is not just, okay, your COT or your delta or your imbalance or something like that, okay, coming up, okay, and okay, that this is, okay, what it is. It is not at all, okay, that it is a sum of at least 5 different things, okay, and when all of them, okay, put together, something, okay, called an order flow chart, right? So this is, okay, something, okay, which you need to know, that if we talk to you about COT is just one aspect of order flow, and if I tell you, okay, about imbalance, okay, that's also one out of the 5 things, okay, in order flow. So if you then volume cluster is a third thing about order flow. Then, okay, there is responsive buying, initiative buying, responsive selling, and initiative selling, and all of this also, okay, makes an order flow chart, right? So when I'm looking at all of these things together, I'm getting, okay, an order flow chart on screen, right? So I hope, okay, this clarifies, okay, some questions, okay, which some of you may have about what is an order flow chart. Okay, now I'll be honest with you, when it comes to order flow, it is not simple, and it is not something, okay, where you look, okay, at a chart, okay, and you will get to understand what kind of trade to take, etc. I'll be honest with you, there is a lot of work involved. Okay, there is a lot of effort which you need to do, okay, to understand, okay, this entire aspect called order flow, right? Bear with me, okay, I'll try to, okay, unravel, okay, it bit by bit. But if you really put the effort, okay, and if you try to understand, okay, what this order flow is all about, and these 5 things about order flow: the liquidity, the COT, the RB, IB, RS, IS, the volume clusters, and the imbalances, you will get a very good understanding and a very good idea about what to do next in markets, right? You will never be caught napping in markets. You will at a time, okay, get an easy idea about what trade to take, what is the proper bias you need to have. This is the way, okay, the professionals approach the market, and we need to move out of our retail mindset and understand to trade like a professional, trade like an institution, right? So I'll be walking you through some examples of what basically order flow can do, but the idea over here is to understand, okay, that okay, it is a sum of a few things, okay, put together, and that gave us the order flow. Okay, keep those questions coming in, guys, and I'll talk to them, okay, about I'll talk to you, okay, about how best, okay, you can approach the market via an order flow chart. So let me just do a few things. Okay. All right. So let's go back, okay, to an order flow chart. And I'll just walk you, okay, through some examples, okay, about how, okay, it helps us get into a proper trade situation and get certain benefits, okay, for ourselves. Okay. And I don't want to go too much back into the past, but what we can look at is a day like today, okay, where there were multiple examples about how best, okay, you can approach with an order flow chart. Now, the instrument, okay, I'm looking at on screen right now is the Nifty futures, and we look at futures because the futures, okay, are the ones which give us volume. Okay, now there is another reason, okay, why we look at volume and order flow, and the simple reasoning is this in index futures, then the simple reasoning is that the volume traded in futures today is primarily institutional. Okay, so I always keep a Nifty or a bank Nifty futures chart open because it tells me more, okay, about what the institution is doing. And if you want to, okay, delve a little bit more deeper about this particular aspect, okay, about institutions trading futures, you need to just go back, okay, and look into your own trading circles, okay, in your own trading community, or in fact, okay, even look at yourself. When is the last time you traded a future as a retail, as an individual trader? When is the last time, okay, you traded a future? You would say, okay, 6 months back, 3 months back, and you will definitely not say, at least 9 out of 10 people will definitely not say I trade a futures every single day, right? So the divide is that the options market is got 99.95% participation of retail traders, and the futures are now left, okay, with institutions. Now, why do I stress on this point? It's for a very simple reason, that because there is no retail in futures anymore, because there is no retail trading in the Nifty futures anymore. An order flow chart of the futures will tell you what institutions are doing at any point in time, and institutions are drivers of market, right? So whenever I have a trade on, whenever, okay, I'm looking at this, in fact, okay, in our VMR, the trend mentoring room, we always keep a Nifty and a bank Nifty futures chart open. And even though, okay, we trade options, we like to look at, okay, what the institution is doing, okay, in a futures market, because they are the movers of the market, right? So right at the open today, we had a gap up open, and a gap up open, okay, we generally, okay, like to see whether the gap up is meeting new demand, right? And today at the open, we had a gap up, and at the gap up, okay, did we see any new demand? No. This is what we call a stacked imbalance. Okay, there are reds over here. That means there is more supply in the market right at the open, guys. Okay, this is the first 30 minutes, 9:15 to 9:45, and this over here down below, this number 10,058 is measuring, okay, all the demand and supply, okay, which is there in this first 30 minutes. Okay, and when this number is red, that means supply is higher than demand. And when this number becomes higher by about 10,000 and 15,000, that is the time, okay, to pay attention, because the market is telling you something very, very loudly and very, very clearly, and you need to pay attention, right? So at the gap up, the market was expected to find new demand to go higher, but instead it found supply. And when the market finds supply and COT, okay, goes red, price has no option, okay, but to fall. What did I just say? Price has no option to fall, because price, okay, does, okay, whatever volume asks it to do, and volume is represented by demand and supply, and the net of that demand and supply is called COT. And here, okay, we get an idea about, okay, what the market, okay, is telling us to do. So what do you do here, okay, when you see a COT and some initiative stacked selling, okay, right at the top over here? You launch yourself either into short calls or you buy long puts. We were buying long puts, okay, right from about 9:25, 9:30 today, because the messaging of the order flow was very, very clear that it wanted to go down, right? So this is, okay, what happened in the morning. So 9:15, the next half an hour, 9:45, 10:15, 10:45, the market, okay, had dropped to a low of 22,233, but the net COT, okay, which was there, the net supply, okay, which was there from the open, and you just have to, okay, sum up, okay, these bars. So we are not looking at one bar, we are looking at the sum total of the last 10 bars at least, okay? And if this is 10,000, this is 4,000, this is 6,000, this is now a net of 20,000 over here, 21,000, and then only 94 is come off. So net 19,000 COT from the open is still there, supply is still adding, and it keeps adding over here, it keeps adding over here, the market climbs back to 22,380, but this old supply is still there in the market, they have not given up their positions, right? And then here, okay, we see some profit booking coming in, very rare. But right here, when it went back to about 22,390 at 11:45, 12:15 on that call covering, okay, which happened on that call writers covering positions, the COT, okay, remained red. That means this early supply was not closing at all. And this was, okay, the reason the market, okay, dropped to new day lows, and it went up, okay, to about 22,152, which incidentally is the last week's volume point of control, the zone, okay, where maximum volume was traded last week. That's what the volume point of control is, and that zone is 22,152 in our futures chart, and the market, okay, started covering up over here, right? So you see this green over here, this green over here, this green over here, and this COT going green. This is now telling you that the market is covering shorts, right? Did we see any kind of green over here? Even, okay, on this climb up, there is absolutely no green over there, which means what? Price has to fall, okay? But for the first time, we are seeing, okay, no reds over here. Do you see any supply over here at 22,140, below 22,200? Absolutely no supply. That means they were not adding to the supply they had added in the morning at 22,390, and they were booking positions over here. So these are also what we call responsive buying patterns, RB, and we've gotten an explanation over that in that other link, okay, I spoke to you about, and the market, okay, has to here. So right over here, as the market, okay, moved up, it added up, okay, a little bit more demand here around this 22,300, and all this green over here was the reason the market, okay, went back to this 22,440 level, okay, which I told you about. Now, a lot of call writers, they do not look at the futures chart, okay, and they were not aware, okay, about how best, okay, to go about this. But the real movement by institution happens, okay, through a futures chart. What really happened in the market today is in terms of the retail commitment is seen in what we call the open interest charts, right? So if I come back over here, so this chart, okay, we keep also open, and this represents the NTM OI chain. Now I'm not looking at the open interest of the full market, I'm looking at only the open interest of the near the money. NTM is near the money. Now what is NTM? NTM is one in the money strike, one at the money strike, and one OTM strike, and we keep it, okay, such that, okay, we are focused on only NTM spreads or strikes only, right? Whatever the market does, we are focused, okay, on that at the money, in the money, and out of the money. And if you go back and check where the volume is traded, most of the volume is traded at in the money, out of the money, and close to the money strikes. And we want to focus on what the money market is doing up over here. So we have this chart which shows you the entire inventory buildup of the market, right? Now I'm just gonna strip up a bit of information over here and show you what the market was doing through the day today, right? So this is a simple open interest change chart, and this chart is an information which is given by the exchange, and it updates once every 3 minutes, right? So this is exchange dominated. We have no control over it. Exchange asks us to update this information every 3 minutes, and every 3 minutes an open interest number gets average. Sometimes it gets traded in 2 minutes, sometimes about 3.54 minutes, but this is not live data like the order flow. This is information which gets updated every 2 to 3 minutes only, right? And in here the green will tell you the call open interest change, and the purple is the put open interest change. And what we do is classically we look for some signs of a crossover which tell us that one party is more stronger than the other, and this happens then the call writing is stronger, the market is expected to fall down. And we look for signs of covering which tells us that the market is wanting now to go up, and this happened earlier in the afternoon today. That 12 o'clock move was driven majorly by call writers covering. Then they came back again, and then late in the day they were forced to cover again. Now there was a true process which went up with this call writing. So this is your typical NTM OI change chart. I'm not going to spend a lot of time over here because a lot of people are already using this chart. But what we do different is we add this component called gamma 0, which is this blue dotted line. Now this helps us to track the open interest which is changing in this market, this particular blue line. Now gamma 0, I had this question on Twitter once. Gamma 0 does not mean gamma is 0. Gamma is never 0, except gamma is that second order Greek. For those who are not informed, gamma is the second order Greek, and it basically is the acceleration of delta, or we call it delta of delta. It tells you how fast delta of an option can change, right? So this gamma 0 does not mean gamma is 0, but it represents a zone where if the market spends time at the gamma 0 level, the market is supposed to be flat and it will remain flat. The market is supposed to be long gamma above the gamma 0 and short gamma below the gamma 0. And simply put, it means that there is a lot more writing below the short gamma level, and there is covering or long gamma or long calls in the market above the long gamma 0 level, right? So here, as this market went up, the gamma did not change at all. So we knew that this was panicky call writing, and this was not going to last because gamma 0 stayed flat over here. But have a look at what happened at 1 p.m. right? The gamma 0 dropped to that 22,150, and I just showed you an order flow chart where institutions were already covering. Gamma 0 drops and the market finds itself above gamma 0, and when the market is above gamma 0, it is a long market. So for the rest of the time over here, we were just buying calls and waiting for the market to shoot up. These call writers had no idea because they went against order flow and they went against the gamma positioning of the market, right? So I've just talked to you about two aspects of the market. If you have any questions, please feel free to ask. Right now, this is the retail end of the market. This is what the entire trading community is doing, right? But we need to be a little bit more smarter as traders and not just focus on the open interest part of it, which is what the retail do. So for most retail traders, their analysis starts with open interest and ends with open interest. But the institution does a lot more than this. The institution is focused on bigger numbers. It's focused on the net of demand and supply. What is moving demand? What is moving supply? Whether demand is increasing or whether supply is reducing, right? And we believe that tracking institution along with retail, right? This is an institutional chart. This is where you will track all what the institution is doing. But if you put a little bit of work, okay, and you track, okay, what the open interest of the market is also doing, you get a much more idea about what the market is gonna do next, right? So this is, okay, all that is in the menu. Okay, if you get to look at charts.vtrender.com, we have, okay, something called the market profile chart, and I told you, okay, something just now about where the market halted today. So if you see back over here, this is last week's profile, this is a weekly profile, right? And this is, okay, where the point of control was. This is, okay, where we stopped today, right? 22,152. And I remarked about this also, and this is a zone, okay, where there was previous demand and supply going forward, and this is, okay, where we stopped, okay, and we moved in higher today. So the market profile gives us structure, the order flow tells us what the institutions are up to, and the open interest as represented by spectrum, by gamma, by delta, tell us what the retail end of the market is doing, right? Now the question is, okay, what is the time frame to use order flow? Any time frame of your choice, okay? Don't change what you are doing. If you are a 3-minute trader, continue trading in a 3-minute time frame. This is a 3-minute order flow chart. If you are a 30-minute trader, time frame trader, you have an order flow in a 30-minute time frame also. See, the volume information of the market will never change, right? The volume is always the same, whether you look at that volume in a 3-minute, 10-minute, 30-minute, it just adds up. On a 30-minute bar, okay, you'll get definitely, okay, more volume, right? So be comfortable, okay, with whatever time frame you are. Some traders, okay, like to trade a 3-minute time frame, a 15-minute time frame. Trade a 15-minute time frame. If you are comfortable trading a 1-minute time frame, you can trade a 1-minute time frame also. The order flow data of demand and supply is the net of buying and selling which happens at the exchange. That will not change at all, whatever time frame you look at that instrument. Any other questions, guys, on order flow? So like I've been saying, it is not just, okay, about looking at what is happening below the bar. It is a net sum of all that happens, okay, in the bar. Now there are two kinds of order flow traders, okay, at least I know about. One is an order flow trader who looks at what is happening below the bar. Now this is the same thing, okay, as what you would get in a conventional traditional candlestick also. You're focused, okay, on what your indicator is doing. You're focused, okay, on what the thing below the price pane is doing. You're looking at a lot of, okay, other things, okay, which you added on your chart, and you're using them to understand what price is doing. Nothing wrong with that, okay? It's a perfectly legit way of understanding price action. But the true order flow trader, the person who understands order flow, okay, he does not have anything else on his charts. Okay, what he will do is he will look inside the bar, okay, and he will look at what is moving between the open and the close of the bar, and he will look at what is moving between the high and the low of the bar, right? So if this is one big bar, 22,459 right here, the order flow trader looks at everything inside. So now, okay, he's looking at this candle as it begins, okay, it's March from 22,340, and he's seeing all these greens over here, right? And this is telling him that demand is higher than supply. So now, okay, even in this time frame of 30 minutes, he knows, okay, price wants to go up. Then the market reaches 22,400, where we know, okay, that there was previous supply, right? So this supply is there. But if you look at this COT, okay, which was building up, then it's still lower than the previous bar. So that means, okay, there isn't enough supply to take out the previous demand, okay, which was built up. So this market has no option, okay, but to go up even further. And down over here, there was profit booking coming in, as evidenced by it. Maybe, okay, we dip a little bit tomorrow and then, okay, think about going up. So the question is, how do you calculate COT on each candle? The COT need not be calculated. We have calculated it for you. It will be there in this fourth row. On every one of our order flow charts, the COT number, okay, would be over here. Commitment of trade. The question is, okay, are we trading Bankex and Sensex? No, okay, we are affiliated with the National Stock Exchange. We do not have any BSE listed products with us at VTrender. There's enough, okay, to do at NSE, guys. Okay, we have mid cap, we have Fin Nifty, we have the bank nifty, we have Nifty. Friday also you'll get a lot of good trading opportunities in the Nifty. I don't want to trade an instrument, okay, which I'm not very comfortable with. Maybe, okay, in later time to come, the Sensex, okay, gets popular, okay, gets that kind of volume like Nifty and Bank Nifty today, we can put money to work over there. But for now, that is enough. Okay, every single day, okay, there is a golden opportunity to trade, right? You don't want to be the jack of everything. You just want to master one. The question is, how do you differentiate the order flow of retailer or institution? You cannot, but what you look for is the bigger numbers. Okay, so like this over here, 1552, we keep an eye out, okay, for the big numbers, okay, who are coming in, okay, and they tell you that there is an institution, okay, which is coming back, okay, to trade the market, right? In the futures chart, 75 to 80% of the volume is still going to be institutional. It's not going to be retail, but you're looking out for those bigger numbers, like, okay, something like this 2000, etc. I keep seeing this all the time. I know, okay, that this market, okay, wants to go up and higher from here. Every time, okay, I see anything bigger than 1000 on my order flow chart, like this come together, this is what we call a stacked imbalance. And if every time I see something like greater than 1000, I know, okay, the market wants to move up, and it wants to move up aggressively. So this will always keep telling you that the market, okay, wants to rise up. So this is an example of a stacked imbalance, buying side, 22 to 23 of them together, and that will always be a very clear signal of what the market is going to do. I talked to you about COT. Then there is something called IB, RB, IB, and RS. So this is still, okay, the Nifty chart. This thing in purple 2 days back saw some, 1 day back in fact, saw some selling over here, initiative sellers over here. This is an example of an initiative selling candle, right? And you get this was a sell side imbalance right here at 22,360. Again, a quantity break bigger than 1000 is what you focus on, and they drive the market down. See, it's all basically sell side bars. You focus, okay, on the colored fonts, you focus on the red and the green, and that will tell you, okay, what the market wants to do next, right? So this is an example of an IS. Then, okay, these zeros which you see over here, they are made basically, okay, stop loss orders, limit stop loss orders, okay, kept in the market. But they also tell you that this market now has got no further demand. See, the zeros have come over here, the zeros have come over here. Whenever, okay, whenever I see these zeros, it tells me that there is no further demand, okay, to drive the market up further. So 22,332 had no demand, 22,320 had no demand, 22,304 had no demand. When a market has no demand, it has to drop. Right? So this is an example of imbalances, and like I've been saying, there are about 5 of them you need to be looking at to get extremely good at order flow trading. Extremely good. Okay, so you cannot, okay, be focused on only one aspect of order flow. To get really good at trading, you'll have to focus on the market liquidity as identified by those zeros and those large numbers, the COT, the commitment of trade, the RB, IB, RS, and IS dynamics. The volume clusters, okay, is what you would be focused on, and you'll be focusing on imbalances, right? So if you want to understand, okay, how to go about this, okay, we have, okay, a free to premium and premium plus options coming up. These are our current pricing, and they are gonna change, okay, in about 15 to 20 days from now. So this is the pricing up over there. If you want to understand, okay, how to work, okay, with market profile and order flow, or are new to market profile and order flow, we have this one-time ECOS plan for you, which is a one-time capital investment for lifetime access. This is a 4,999 plus 900 GST, which is about 5899. You'll get a user ID and password, okay, to log in to about 12 videos on market profile and order flow, explaining, okay, what order flow is all about and what things, okay, you should be looking at in an order flow chart. And along with that, you get about an 8-day pass to order flow live streaming charts, and the entire things, okay, about option also. This is absolutely free. This is, okay, for you to gain an understanding about how order flow can work with the theoretical concepts which we have explained to you, right? So this ECOS option is always there, okay, for you. 4,999 plus GST. That's a one-time cost, and it will give you lifetime access to all that we are doing over here. And you should be seeing the entire order flow, okay, from there. So this is where the site is hosted. So this is the eco section, where you'll get a little bit more idea about what this is. This is up to you, okay, if you want to, okay, work, okay, with something different. There are 12 videos, okay, which are gonna give you. Now this ECOS is a DIY. It's a do it yourself. We show you, okay, of what we do, but it is for you, okay, to work with for yourself. And if you are confident and you think you can do it by yourself, the cost is, okay, nominal, okay, to get lifetime access, okay, for this ECOS. We also have a program which we started, okay, on popular request of a lot of traders, where they wanted live hand holding in market hours on these charts and on these concepts. So we call it the VMR, short for Trender Mentoring Room. And in here, what we do is we give you access, okay, to this market profile and order flow charts, as well as we handhold you. We walk you, okay, through all that you need to understand about market profile and order flow. And you have an option of 3 plans over here. All plans, okay, include access to a training library where there is an understanding about the strategies to be used. We believe in giving you information such that, okay, you are clear with information when you are trading the markets. But all these plans include free access to live order flow and market profile charts. And we'll give you access to the training library of 15 videos also with this, where you'll get to understand how best, okay, you can work with this. So that's the mentorship program. That is everyday analysis. We work together as a team, we trade together, and we understand the nuances of the market together. And if you don't want to go that way, you are still interested only in the charts Excel, this is basically, okay, the order flow add-on is about 3,000. That's premium plus is about 4,720, and you will get access, okay, to these charts, which will tell you what is actually happening in the market and what you need to do at any point in time, right? So for those, okay, who are interested in learning, you can look at that ECOS option. For those, okay, who are interested in hand holding, you can look at that VMR option. If you still want to go, okay, only with the charts, okay, it's completely up to you. Okay, you can, okay, work with the charts as well. I work with these exact same charts. Okay, there is absolutely, okay, no difference. What I look at and the strategies, okay, which I use every single day, they are all used in the ECOS. That they are used in the training library. People who work with me in the VMR know that I use only those strategies, and those strategies are the ones, okay, which are enough to give us all the kind of rewards we want. Right. So this is it from me, guys, about order flow. It's a steep learning curve, but a curve in which if you decide, okay, to work with, okay, you will position yourself, okay, very much ahead about virtually everybody else out in the market. Yeah? Okay, I'm a big fan of Jim Simons, very good trader, quantitative trader. Unfortunately, he passed away last week. And it was a really bad blow for us. But one of the things, okay, he always, okay, kept telling, okay, whenever he used to speak publicly, very private kind of an individual. But one of the things, okay, he always told us that, in trading, you do not do, okay, what everybody else is doing. There is a vast majority which follows, okay, only one set of things, right? So they are just focused, okay, on doing it one particular way. And data shows that the vast majority of traders, okay, lose money. But Jim Simons, okay, he said, okay, that if you can find, okay, those imbalances, those little inequities, okay, inequalities in the markets, those imbalances, those, okay, anomalies, okay, is the word he used to use all the time. Okay, you're building yourself, okay, into a profitable situation. Do what other people do not do, and that is, okay, your edge in the world of trading, right? So just leave you with this, something, okay, for you, okay, to look at and think about. It's up to you, okay, how you want to take it forward. We basically, okay, talk about what we know, what we do. We are not here, okay, to convince you. I'm not here, okay, to put a belief system in you. It's completely up to you and your account and how you want to take your account forward. You can do that. You can do it, okay, your way. Right. So currently, okay, these are the instruments, okay, which are available for you to trade. There will be a lot more instruments, okay, added to this eventually. But for now, okay, these are about the entire set of instruments which are there. All the futures and options are here. You can draw up an order flow of any particular chart over here, including options also. Okay, the best thing about order flow trading is that it allows you to pick up, okay, some instruments, okay, of your choice also, right? So that 22400 CE today, this is the order flow. Right, so all this, okay, was writing coming in this 22400 CE right here, right? So this COT was all writing, red COT, right? So that means there is more supply, okay, than demand. Supply means, okay, there is a lot more writing coming here, and they started covering over here this green COT, right? And this is the time, okay, it took off 22400 CE, right? And you can see it, okay, for your 22300 also. Same thing, COT, okay, when green, price had no option, okay, but to run higher, right? So this is, okay, what you need to, okay, think about and look at as you navigate, okay, these instruments. Okay, I'll just take a few final questions if you have any, and then, okay, we'll close the flow down. But if you want to get seriously acquainted with it, the best place for you to start would be in the training, in the user manual section. You will get a sum total of what we call the order flow. Now, the order flow, okay, over here at VTrender is very different, okay, from the order flow, okay, which you may see in other charts. I'm not going to go into that, but we made it different, okay, so that, okay, it stands out and you know, okay, that you're working with some real order flow charting out over here, right? So with this, I'll sign out, and thank you all, okay, for joining in. I hope, okay, this was a good learning session for you. If you have any more questions, okay, please feel free to ask us. We are at charts@vtrender.com, support@vtrender.com. You can contact us on WhatsApp 9284331270, and you all know, okay, where to contact me on Twitter, and you can contact us on @vtrender on X also. Thank you for making it to this session today. I hope, okay, you had a little bit of learning or some takeaway from this, and if it helped you, okay, to become a better trader, there'll be nobody, okay, more gladder than me. Thank you all for coming in, guys.